Okay, so let's kick things off. I'm joined by Herb Diaz. Thank you so much for joining us today.
Hey, Mike.
How you doing on your end?
Thank you so much for having me, Mike. I appreciate it. Really looking forward to it. It's actually my first time on a podcast, so really looking forward to it.
Well, welcome. And so for those of you joining, my name is Mike Blumenkranz, head of loan origination with Newport Commercial Capital, Newport Private Group. We're a private money, hard money lender, a direct lender as well, bridge financing. And so Herb has joined me today, and Herb's company on more of the traditional side of mortgage lending and mortgage brokering. Why don't you tell us a little bit about yourself, what you do, what type of deals that you work within, and who you can help?
Absolutely. Yeah. So my company's Prime Rate Lending Solutions. I've been a mortgage broker now for 3 years, but I've been in the industry for about 21 years. So started off right as I turned 18. We focus mainly on, the traditional financing, single family residences up to 4 units, conventional FHA, run of the mill, help the good old American family get into their first home, first time home buyers. That's really what our niche is. Sometimes we do run into the occasional commercial transaction, but we usually broker that out. Would be glad to pair up with your company and be able to do that more often.
Sure. So you brought up something where you've been in this for 20 plus years, and I'd like to hear just a quick little snippet of what have you seen change in the dynamics or the landscape of real estate since you started and where we are today?
You know what? I mean, I think that probably the biggest thing, and it's going to sound kind of obvious, but it's been the internet. Because back in 20 years ago, it was, it was there, but it wasn't as used widely for real estate. I can still remember when it first started, hot sheets. You know what I mean? And
Okay.
submitting offers via fax. So
Sure.
it's profoundly changed in that sense, where now
Yeah.
we're using email, the internet's vast, and of course social media, and then everything before 2008, it's kind of like before Christ, BC, and then
Yeah.
everything after that is AD. So there's been a lot of shifts and changes, but you know what, I think that it's helped me grow as a broker and help me provide the guidance to my agents and originators, with the with the right information for them to not just get business, but do it ethically too.
Sure. So you still have the fax machine in the office?
We do. We
Oh,
do.
wow. Good old days.
It's part of our museum in the corner.
Yeah. And so part of why we're having a conversation today is to really show the dynamics of two companies in a fairly different niche, but how we can work together and share a pipeline, a deal flow. And so we're going to go over a couple of deals that you've done. We'll go over a deal that we've done and just show how there's some connection for the two of us to do business together. So let me ask you a couple of direct questions as far as what your pipeline looks like. What type of deals are you looking for? You're on the residential side of the business, so 1 to 4 units. But you were mentioning that you have now a channel or an opportunity to do more on the commercial side. Why don't you walk us through that?
Yeah, so a lot of the clients that we've had, and like most brokerages, are past clients, and they all kind of grown and expanded to their portfolios. They start off with houses or start off with their first duplex, and they want to grow and grow and grow. Well, we've been running into some opportunities now where we have a client that's in their in their 4 unit, and they want to buy something that's beyond 4 units, and we have to go ahead and give them access to that. And we don't do commercial, right? We do have to broker that out. And so quite often we don't want to hinder their growth. We want to obviously expand their portfolios. And we would be able to go ahead and give, a company like yours that opportunity to be able to share that. quite often, the 1031 exchange comes to mind, and
Mhm.
more often than not, they have rolling exchanges that they've been doing, and they just need to buy something much bigger. There's
Mhm.
only so much 4 unit that they can have, and we'll have to go ahead and help them, pair up with a broker that's able to go ahead and help them with that.
Right. And I think that's where we can facilitate the capital as a debt provider for someone that you mentioned, like a 1031 exchange, rolling into a new deal, moving into a different from SFR into the commercial space. So why don't you walk us through a recent deal, maybe something that had some roadblocks in it, and tell us how you were able to overcome those roadblocks.
Sure. So, recently we had a home buyer where he had multiple investments already laid out. He was coming from his home and wanted to go ahead and move into a triplex. Now, where his had a little bit of a situation is that he wanted to move into it, where usually these products don't allow for that. They're solely for investment. Fortunately, working within that bank and through the relationships that we have with our account executive, we were able to go ahead and get exceptions to that to make it happen for that particular borrower.
Nice. So repeat client, it sounds like somebody rolling into another deal. Um, in your pipeline, what do you see mostly, new business or repeat business? What would you say the dynamics on that?
So, over the last 18 months, the predominant business that we had was repeat business. There was a huge refinance boom that we
Hmm.
experienced. I think over this last 18 months, 24 months, I could say that some people may have refinanced 3 times.
Oh,
So
wow.
yeah, because it was just, the kind of market that we were in. But as that's kind of came and gone, as we know, interest rates are up. They're going to
Hmm.
continue to increase. That's now gone. The refinance boom is over, and then any kind of market for that's going to need to, it's going to be, a little bit dry for a minute.
Hmm.
Now it's a lot of new business, a lot of purchases, and we fortunately we have a sister company that's a real estate brokerage that goes ahead and feeds that pipeline to us. And we can go ahead and originate new mortgages and
Hmm.
help people get into new homes. One of the things that I was kind of, as we were preparing for this, thinking about was a client that I have. His name is also Mike, and he's an elderly person, and he's kind of ran into a little bit of bad luck, and maybe for whatever reason, not the right financing that he's set up in. And his whole income is based out of his 8 unit property that he owns
Okay.
in somewhere in LA. And the issue is trying to get him the financing for something like that, because it's not just an 8 unit, it's a commercial property too. It's got like retail stores. So
Sure.
someone like us really doesn't have a solution for it. However, the problem has become that he's now kind of behind on his note, and we need something to go ahead and resolve the situation for him. And he's got probably 80% equity in the
Okay.
property. So
Yeah.
it's a
Very
very,
strong.
very strong situation
Hmm.
that a company like yours really comes to mind when you mention those opportunities that you guys offer.
Sure. So let's talk about this a little bit further. And we've seen quite a bit um, of these situations, right? Especially with a rental opportunity, whether the rental income had slowed down or there were some issues, where they want to roll this into another deal. But someone like this and a structure like this would be more of a bailout structure, because he's behind, and a lot of lenders would shy away from um, doing business with somebody in that situation. However, for us, we're more than open to working with someone like that, or for this type of situation. So, we would probably underwrite this at a 70% LTV, but with what you've mentioned is that's more than enough for him to, what I would call reset the debt clock, right? And that's really what he needs, is just to get out of the current debt structure reset into, let's say, a 12-month term, restabilize, reassess, and then he can, hopefully get into something long-term if that's the plan. And we also see it where, they want to release some of the units or potentially just put it up for sale. So reset the debt clock, put it up for sale, and then, see what happens. I've seen quite a bit of those in the last 12 months myself.
Yeah, and the good thing is that he's on his own. This is his source of income, and this would actually really be, in all sense of the word, a bailout. But it means so much to someone like him because he just doesn't seem to have a solution for now. We get some positive history. Was it payment history?
Sure.
We could do something long term, maybe after the fact.
Yeah, and I think that goes back to how other banks underwrite. Some underwrite with a lot of red tape, and our company, I would say, we underwrite with very little red tape, which is why we can originate a loan and fund so quickly. For something like this, we understand it's income producing. That's great. Depending on where it stands on a DSCR calculation, we're open to taking a look at something like that. And at the end of the day, having an opportunity for someone who might have low liquidity but strong equity, we'd love to do business with somebody like that, because for us as a debt fund, we underwrite based on the asset, not necessarily the person. So, someone too who may be in your pipeline that has a credit score that's just not going to qualify for some of those bigger banks that may have the more attractive rate and terms. But for us, our benchmark for a credit score, in my opinion, is fairly low. But it's also because we understand that if you're out there maxing out credit cards, buying properties, flipping properties, going through that emotions, your credit may take a toll. But again, when we underwrite based on the asset, things change.
Absolutely. Okay, great. And the one thing too that comes to mind as you mentioned, that is the second scenario, and where we have someone who's been a long-term investor in the sense that he holds, right, and wants to begin to flip. Okay. And he's got three different sets of 4 units, but he's like looking into, what, I want to get into the flip game, and has exactly that. He's very highly leveraged and doesn't have an opportunity to be able to do that, but has the experience to go ahead and kind of jump into that. And, we don't really have a solution for him here, but that would be something that would really work well with your company.
I think so. That would be a great fit for us. And so, as I go, prepping for this call, as well as I go through my pipeline of closed loans that we have, there's a robust Rolodex, right, that we have of clients that utilized our debt for a 12-month term with the intention to seek long-term financing. And that, I think, is where we're going to be able to do the most business together, is for us, now we're a resource for the short-term debt. We solved that problem. And now we have a partnership with a company like yourself to be able to refer business back and forth. So it's just going to be a great year for us, I think, here in 2022. We're going to discuss a pretty great deal that you were able personally to close for your business, right? You recently purchased an office building, correct?
Yes, sir. Yes, sir. Thank you.
Okay.
Yeah. So it was, the office building, we were taking our business in a different direction. It was exciting, right? We came across it. And I had a pre-approval from Wells Fargo, a large institution, for a commercial loan, SBA loan. And as many people out there may not know, there's a lot of incentives with the SBA, which is the government's version of aid for a lower down payment to secure property for your business. So we were going to take advantage of that. we were pre-approved, but hadn't really freshened it up. Kind of had to go ahead and get the property to kind of go really deep into it, and became a situation where we were in competition for the property. We had multiple buyers wanting to pursue the property, the building, and on luckily for us, we won the bid. Right, this was in September 1st of 2021. However, it was all beautiful. It was like felt like a huge accomplishment. It was supposed to be a 60-day close. That did not take 60 days. It took until January 15th, which was about 11 days ago now, for us to close on that. And the main reason is that, yes, going through those products with the SBA, there's a lot of red tape. There's an incredible amount of paperwork required. Initially, some of the requirements that the loan officer presented were not, once it came down to it, and it was an underwriter and an account manager that were handling the meat and potatoes of the transaction, said they would not suffice. As we're going through those issues with the loan, we have an angry seller who's getting frustrated with the fact that we're requesting 30-day extensions, and eventually began to cost us here as a business money, because in order for us to keep the transaction going, we were hit with a extension fee of nearly $20,000 per month. So we ran into that, and so all the while there's like I said, a lot of red tape with the SBA, and it would have been great to have some sort of solution there, but we just kind of had to go through, I dare say hell, and come out the other way, and to get it done. But it would have been great if there was another solution for it.
Sure. Yeah. So hearing about this deal too, and going back to the key factors here, there's a lot of red tape. It took much longer than you expected, potentially almost killed the deal. Luckily, the seller was willing for you to accept an extension for a fee. Sounds pretty standard. And all the while, you're chasing this SBA loan. I'm not sure if you mentioned it, but what was your down payment?
So I was going with the 10% down option.
And that is, in the commercial space, very, very good. Almost a unicorn of a loan, right? And
Yeah.
worth the headache at the end of the day?
Well, now you can say, oh, we have the building, it was worth it. But as I'm going through it, I'm like, you want to quit several times. I wish there would have been a better solution, right?
Sure.
Or working with somebody else.
Yeah, and I'll tell you, so for NCC, Newport Commercial Capital, for us taking on a loan like this, the leverage, we wouldn't be able to do a 90% loan to purchase on a commercial building. And so the SBA incentives, that's phenomenal for you. However, when you get into a situation where you're going to go past your close date and it could cost you money or it could cost you the deal, that's the time to give us a call, because we're able to move very quickly. And we do help a lot of people that are, they're searching that really cheap debt and, low down payment. And it makes sense for a certain case. But in the case where you're running out of time, we can be helpful. High leverage for us, 70%, could be higher depending on the deal, income producing or not. That's something, the way that we underwrite too, to be able to just move quickly on a commercial property, and then you take away all the headache and the red tape, and you get better sleep at night knowing that, okay, Mike's going to take care of this deal. It's going to get, done in the time frame that we have. And then you can move on. You could always go for the refinance afterwards. If you were low on liquidity, you need to pull some of the dollars you had to put down back out. But I'm glad to hear you were able to pull this off. Congrats on the new building. So why don't you tell us what else, are you looking forward to in 2022 for your business? What are you, hoping to get out of this year? What changes?
Well, this, as we know, the market's shifted, and it's going to be the hot topic year round, in the mortgage industry. And really, the biggest thing is to help a lot of the borrowers that we do have with purchases. There's going to be the situations where um, the refinances are still needed. I mean, the rates aren't that high yet, so there's some good opportunities there, still. But for the most part, focus in our main niche is getting people into homes, getting people from their first home to into their dream home, facilitating that. Um, so in just kind of working hand in hand with companies like yours, our sister brokerage, to go ahead and kind of come together and put them in the properties.
Yeah, sounds good. Well, I appreciate your time. This has been hopefully, for anyone listening, beneficial. And for the sake of, the purpose of this podcast is really just for people to understand two companies here, and what we do. And so, if you do have any questions, we'll have some contact information provided, so you can get in touch with Herb and myself.
Awesome, Mike. It's been a pleasure, but I appreciate the opportunity. And yeah, we're looking forward to a great 2022.
All right. Cheers.
Take care.